Hello traders, welcome to your daily economic calendar update for Wednesday the 11th of March 2015, and we are still seeing currencies trending as a result of Friday's non-farm payroll and the strength in the US dollar. Well, that's the story that you could possibly be looking at first glance, as we see multi-year lows for the euro and the Australian dollar, and the New Zealand dollar is also in a sharp fall as well. However, while we're seeing intraday reversals from the US dollar JAP pulling back and also a decline in US yields and also a very steep slide in equities, that's hinting to us a completely different story. So while we did have US dollar strength, we're also seeing, due to the optimism and things like that, we're also seeing effects of risk aversion. So the investors are starting to get worried about the Federal Reserve raising interest rates. And this would be a big driver towards the US dollar flows. However, they're worried that it's creating a larger gap between other economies, and it's going to have a knock-on effect. So we're seeing today the big story was that Germany hit negative interest rates in their bonds, and that means that the ECB would have to buy them up with a negative interest rate. And we're starting to see the world's most liquid instrument now offering it negative yields, really affecting the market environment. Because initially the ECB's quantitative easing was thought to be quite positive for the European stock market, the DAX, the CAC and whatnot. However, investors are quite nervous about the dynamics between the ECB buying bonds and the Fed potentially raising rates. So we are seeing a slight easing into the market of risk aversion. So it's just something to be aware of and to try to explain to you really what's happening. And that's why equities are coming off and people are getting quite worried. However, that aside, we still do have a divergence of economies where the Australian economy is diverging, the New Zealand economy, but we'll talk about more on that in a minute, and the euro is getting worse. So that's why the slides in the currency pairs continue. The ECB's Draghi speech will come up tonight, and that will also potentially provide some sort of forward guidance for the euro and how it's going, and Draghi may actually be a little bit upbeat. We'll have to wait and see what happens there, and if he does, we could see a slight bounce in the euro just to stop the pain and the bleeding. But it's going to be quite an interesting speech, and we'll see what happens in a short period of time. But the big news that I'm really looking at is the RBNZ's interest rate decision. They are expected to keep rates on hold, but it's the monetary policy that I'm quite interested in, because the New Zealand dollar has come under fire lately, and it was hit the hardest with a 1.5% fall against the US dollar, and that's due to environmental terrorist threats poisoning Fonterra's milk formula. And that is a big thing for New Zealand, as they get a huge portion of their GDP from the dairy industry, and Fonterra is their largest basically producer. It's now owned by another country's company, but nonetheless. So the market is really looking at the comments on New Zealand's inflation, and they're also looking at their forward guidance for the interest rate, and that's going to be really key. So keep an eye on that. We could see some pretty big moves in the New Zealand dollar, as the market is really quite focused on this, and they want to see whether the New Zealand economy is diverging away from the Australian economy, and also if it's breaking away, it will then start get treated a little bit different in the short term. Okay, so they're the two major economic data we've got coming out. Also, I won't have put a video out in time, but we do have the economic employment change and full-time employment participation rate, part-time, and the unemployment rate for Australia. Now, this is going to be a big one once again. If we see the data slide even further for the Australian economy, that is only going to fuel further falls in the Australian dollar. However, if we see a solid number, as what's potentially being indicated, and a stable, but they think that the unemployment rate could actually get worse. We're going to have to look at full-time jobs and part-time jobs as well as the overall employment change. But this could actually, if it comes in stable, we could see the Australian dollar find some support. However, if it comes in bad, we will definitely see the sellers just jump back into the Australian dollar and dump it. So that's something to really keep an eye out on. And I'll be back again tomorrow with more information. So stay tuned, and until then, trade well.